everybody. Welcome to the Trading Market Technicals morning call video for Thursday, January 16th. Well, the markets did push higher and broke out of that range that we've been in the last couple of days. Dow Jones up 108, Nasdaq up 31, S&P up 9.5, and the Russell up just about 8 points. Good price action. It's just real funny because when you're looking at price action all day, and one day we had the high beta names really take off, and they got taken to the woodshed yesterday, and we have this continued of money rotating in and out of different sectors. One thing that I want to make a point, the retail sector actually has been very weak, and that's a little bit of a concern, but we'll just, again, take it one day at a time. Right now, the markets are probably going to challenge the highs like we talked about on Monday. That's why when I said one day doesn't make a trend, when the markets were down. And we did retrace back most of that candle, so to me, I figured there'd be some continued follow-through. But the price action, a lot of stocks have been very quiet, very, very subdued, which tells me I do think that the markets are just about ready for that correction. But we're not looking to pick a top. We'll let price tell us that we do have a local top, tradable top in place. It hasn't happened as of yet. So there's a few things that I want to go over today in the video. Not much of any indicators because the indicators are still pointing to higher prices at the moment. Because remember, price is king. Price follows the indicators. Lag price. Price is always first before anything. So if you look at, we did have a real good day. Bank of America had some good numbers yesterday, and the banking index continues to move higher. And I said in December, banking index and the home builders are the two most favorites, as well as solars. I think are going to outperform in 2014. Now, do we run and chase any of the banks? No, of course not. But we do see that we have some really good price action here in the BKX. So I do think there's higher prices, and would love to get a pullback for a dip by maybe back to the 20-day moving average, somewhere in that area. But this is a BKX looking really, really constructive. I want to show you just one or two new indicators, new highs, new lows, back above now, starting to break back higher. Good sign. So some of the stocks are starting to make new highs again. But again, we're still really in this range here from the zero line back to the 500%. So we really need to continue to break out higher again before this really starts to take shape. But that is a good sign. I just wanted to point that out to you. Also, we have some real good developments. Now, I mentioned that we want to watch what crude oil does, and crude oil actually traded out of its 20-day price channel. You can see here the 20-day lows, broke back out of it. So starting to wake up again, and this is interesting. And I like this area here. As you can see, have a big cluster of support here, right along here. You have your price volume profiles. The only thing that scares me, if we lose this 92, you can see we have nothing until down to this really 86, 87 area. And that could easily happen. Now, we are coming into some seasonal strength in crude oil and the energy stocks. So if you want to kind of step aside from WTI, the crude, meaning the USO, if you want to play that ETF, start looking for some energy stocks, because that's what I'm going to be doing over the weekend. They're starting to heat up a little bit, and one of the stocks that I do like is Schlumberger, which is an oil service name, SLB. I do like something like that to start nibbling in. But that was one of the first standouts that I had looked at. Halliburton, another one starting to wake up. HAL. So the energy service sector is starting to be in play, and that runs up until about April. So plenty of time, obviously, to look around. But even if you like a stock, no reason to go all in right off the bat. Start nibbling in, and if it starts to come in again, you buy a little bit more to get a better average price. Okay. Now, I'm going to get into silver, gold, and palladium in a moment, but I wanted to show you the dollar, because that's going to definitely affect what happens here. Now, the dollar had a decent day yesterday, and that's why you can see that was up 40 cents. Now, we're still within this range, but if we take out this 200-day moving average, I think gold and silver might have a little bit of a problem, at least for the time being. So right now, we're capped here. We're okay. And you also have this horizontal resistance area, which coincides nicely with the 200-day moving average. I don't know if this is a one-hit wonder. I'm not sure. We'll see what happens today. Dollar's actually dollar's down, very small, but it is down at the moment. But we'll see if this comes into play. So let's keep an eye on the dollar, because the dollar will affect commodities prices. Okay. All right. Now let's go into gold. Now gold, like I said yesterday, um, hit that 200-day moving, 50-day moving average, excuse me, and then started to roll again. This looks like just a regular small little bull flag. I think it's going to test the 1280. Now, if it gets to the 1280, you can see we have a lot of resistance here, right? Here, here, here. So this is a very big and valid trend line. So if it breaks back here and can't get above it, that's going to probably get me into a good, at least a quick short-term short trade. Okay, I do like gold higher as well as the metals are concerned. I like silver better than gold, but if you like, if for a moment, I would say this here. If we can fail here for a trade, gold might be a good short. A good short counting, because it's easy to manage, right? Your stops are well above up in this area, and then you're looking for at least the test of that 50-day moving average. It'll be underneath it when it breaks back above it. But again, you want to wait and see how that reacts to this zone, because if it does just breaks right through it, then obviously it's not going to be a gold. It's not going to be a short trade. If anything, you're going to be wanting to look to buy pullbacks after it breaks back above there. Okay, so let's take a look at silver. And I like this better. As you can see, much more of a cleaner chart. We have a nice symmetrical triangle down below, just basing, trying to break down here. As you can see, break out. We tried to break out. We had it, but we failed. Sellers came in and pushed it back down again. And now we're sitting on that 50-day moving average. I like silver, and I would like silver accumulate on any pullbacks in silver for a big breakout. Now that's going to happen. It's just a matter of when. Now, yeah, you have to kind of be in it, because if you don't dabble in it and you wake up one morning, silver's going to be up 40, 50 cents, and then it's gone, and then you're not going to be able to chase it. Just like I try to get short oil, gold, and every time I got short, the next morning I'm looking to sell it. It was down $20 already, or down 10. So then that's the type of the commodity you need to kind of nibble in before the anticipation of a breakout. Okay. Now the palladium, as you can see, our silent leader holding up very well. Palladium was up. Now palladium is down about $5 today. Not much of anything, but holding his zone here. And to me, this is a good area. We got plenty of support, guys. We got the 50, the 200, the 20, all now starting to curl back up again, as you can see here. So this here is very positive, and the way that it's consolidating here for the last 5-6 trading days tells me that I'm anticipating higher prices. Okay, which would take all of the metals as well. Okay, so just to keep that in mind. All right, so let's go right into the chart segment. Daily chart, you can see we met 3 extensions. We are now at this area here. What I think is what is going to happen. Really, what I think means nothing, but this is what I'm anticipating. Nothing actionable, but what I am doing right now is looking for good quality long setups, because the trend is long, on any pullbacks to any support or moving averages. Stocks that maybe have been talking negatively, starting to pick up some volume. That's what I'm looking at for a trade, because I'm not going to be legging into a lot of long trades at these areas, because I do anticipate some sort of a pullback in the coming weeks. So what I like to do is, I think that most likely, as you know, the markets are made to fool the masses. I'd like to see, and what I think would happen is that price action brings us back above, making new highs right up into this area here, 57, 58, 18, 57, 58, trigger all of the stops, and then fail. And then once we fail, and we have a pretty violent reversal, then I think that a local top is in, and you can probably look to short rallies for maybe a few weeks. And that would take us probably back down to the 1790, 1760 area. And it would still be bullish. Okay, so I think this market has a lot more legs to the upside. But, again, having from the October 9th just literally just going straight up, it's just not going to happen. Eventually, there's going to be some sort of a decent correction. I hear people saying 10 to 20%. I think that would be actually very healthy for the markets, but I think it hurt a lot of people. I think 5, 6, 8% would be more than enough before we take the next leg higher. Okay, now take a look at the hourly chart. So as you can see here, I did a Fibonacci retracement, and here's my target, 1857, or for this previous high to low, 1857 will be my target. Now, what could happen is obviously not happening today, because we're down $1.75. But what I'd like to see is an opening gap up higher, a run hard taking out the previous high, reaching the target, and then sometime late afternoon start to sell off. Now that's not going to happen today because obviously we're down $1.75. But if in the next day or so, if that could happen, then I think you're going to have some decent a decent pullback. And again, doesn't have to, but this is what I'm anticipating, something like that to happen. Right now, as you can see, we've got a nice bull flag. We have the flag right now, and we're flagging right into support here at 1838. So if it holds and takes out that flag, which we need to take out about let's say 1843, then I think we'll be chugging along again today to move to higher prices. Okay, don't fight it. Don't fight the tape. We all know that the markets are extended, but if the markets continue to move higher, that's telling you that you want to be looking to get long. And it's funny because you're looking at a lot of long candidates. You say, okay, we'll look to try to get long, and what happens to stocks? They run up a little bit, and then they just kind of fail, and then they stay subdued pretty much all day until one final move higher. So it's kind of nerve-wracking, and that's not what you want to see. If the markets are really running and chugging along, market should really run in a bull flag pattern, run up, flag, run up, flag, run up, flag, or even just grind higher. But when you have markets that they either run up in the morning and then just kind of sideline pretty much most of the day with a couple of blips back and down, and then a little move higher, that's not really what you want to see. It's not healthy price action, and that's what is a big concern when watching these markets all day. All right, anyway, spiders, as you can see, we're right about the, literally just about to challenge the highs here. And if we do break out of this uptrend line, then I think this may have, again, a little bit more legs getting back up to that 1857 in the E-mini S&P. Diamonds, just shy of the new high, as you can see. Same thing. Energy continues to build as we have the Bollinger Bands moving up. Now, as we were sitting down here consolidating, then we had a little bit of a blip. Look what happened. It unwinded its overbought readings in a momentum indicator, stochastics and MACD, which, again, is good. And the stochastics actually got down to about 35%. Now, if the diamonds could continue to run higher, this will actually turn around and give us a buy signal again. So, healthy price action when it just kind of consolidates here. Transports actually did not make new highs, I believe. Oh, no, it did. It made new highs and now is above the 2012 lows. This is the uptrend line from 2012. So, very healthy. When you have the leader making new highs, I think just everything else is going to follow. And IWMs, as you can see. And now look at the IWMs here. The Bollinger Bands are really pinching. I'll open that up for you guys. See, Bollinger Bands are really tight here. So, as price is breaking higher, I think that's going to give us a little bit more excitement to the upside here. And that's another one of our leaders. Q, same thing. We have a Bollinger Band tightening, and now we're starting to break out. And it is now really doing well. A lot of technology stocks are doing well. Semiconductors are doing well. That's what you want to see. Banks, semis, they're all chugging along here. The right sectors are chugging along here with the indices, and that's a good sign here. All right, so let's go right into our sector charts. As you can see, gold, like I mentioned here, that would have been a good spot. But again, the way it broke bearish symmetry, I'm not looking to kind of just to get short here to be short. I think gold would be a better buy, even if it holds here and then starts to move. Because right now it's just flagging on very low volume. And here's the XLE. And in the XLE, you're going to have a lot of oil services and a lot of oil energy stocks. And as you can see here, the USO obviously tracks oil, crude oil. But you have this huge bearish rising wedge. And again, only bearish if it breaks below. But within the energy stocks, telling me that a lot of these energy stocks are doing well. And now we're coming into some seasonal strength. I don't think you're going to get a breakdown of this XLE. I think, if anything, you want to start looking in the XLE for some quality setups, some buy setups. And you could find it, literally go into the holdings of the XLE, top 10 holdings, and look for the best trade setup. And that's what I look for with trade ideas. Okay, let's take a look at the USO. Really nice here. Nice move up. And WTI had that 20-day price action. You can see 20-day lows. Now, again, has a lot of heavy resistance. You got the 20 to 50 to 200, but to me, I don't like. I mean, this is great for a day trade, but I'd like to see now come back in, kind of base like this. Once it bases for a week or so, then I think you'll get more of an explosive move and a lot more energy to break above this little area of resistance. So right now, no trade in USO. Also, we have the X. Oh, you know what? I wanted to show you. Let me just see something here. Oh, here we go. This is what I wanted to show you. The USO trade, and I said no trade in USO. Look what's happening though. This is the bullish percent ENER. The bullish percent in the index is absolutely, bar none, probably one of the best. It goes off a point and figure chart. This is absolutely what would scare me as a buyer. This is literally just breaking down here. Now, this is a good sign, because if it breaks down, let it break down into this 35 to 45 percentile, and when it starts to cross back up like this is where you're going to have a really good move. Now, remember, if you look at it, right, we have the move up, and even though now we're up in this area and making a higher low from here, this is where you still want to be holding all of this. And any time you start getting above, you'll see that breakout. They indicate is a very good precursor of what's to come. So right now, this is why I'm not looking to get long USO, which would be, of course, crude, because this is still rolling over. Okay, want to just get that point across. Okay, XHB, just kind of sitting around here. We broke out, we broke back down again, holding above the trend line. Fine, doing fine. Nothing wrong with the chart at all. Same thing with Lennar. So the home builders are holding up really well. I mean, obviously, it's when money rotates in and out of it, that's when you're going to get a big move. And that's where you need to be in, is start nibbling a little bit. Back above the 20 PHM, I do like the PHM again. And KBH, love the KBH, above the 50, above the 20, above the 8, and just basic consolidating outside that line. So that's a good sign, guys, of what to look for. XLF, just wanted to show you, as you can see here, breaking out. There's the Banks and Financial ETF. Citibank really doing well. I think Citibank reports today or tomorrow, so just take a look at it. And also, be aware of what you're holding, and take a look at the earnings calendar. You don't want to be waking up to something that goes against you, a big move lower. JP Morgan, real big move up. Again, beautiful, another bull flag. Again, I would have liked to see this come in a little bit more. Now it's getting a little too frothy for me. A lot of analysts are saying the same thing. Goldman Sachs really not doing too much of anything. And, of course, Apple, big move on a China Mobile deal. Their phones are selling like hotcakes, so it should really help their bottom line. So Apple really doing well. All right, guys, let's see what happens. Remember, options expiration is tomorrow. We have initial jobless claims today. As the week ends, we do get a good bullish with options expiration. Usually is a bullish week. Right now, it has been so. Again, don't fight it. Let the market tell us what to do next. Right now, you should be looking for long trades anywhere, any good quality stocks that are going into support. Maybe that's pulled back for whatever reason. That's what you want to look for. That's what you want to trade for the day. Have a great day. We'll speak to you tomorrow. Take care.